Hey Orange County, the fall housing market slowdown has begun. Kids are back in school. It's finally starting to cool off at least a little bit, which means we're starting to see the general slowdown of the housing market, which we usually see this time of year. So if you're thinking of buying or selling a home between now and the end of fall, what does that mean for you? Well, that's exactly what we're going to talk about on today's episode. If you're a returning subscriber, thank you so much for your continued support. I really do appreciate it. If this is your first time here, hi, I'm Josh Alexander, your local Orange County real estate agent and host of Orange County Housing Market News, your one-stop shop for all things Orange County real estate. So if you're thinking of buying or selling a home and you want to make sure you're one step ahead of everybody else, make sure you hit that subscribe button. So on today's episode, I'm going to be going over my September housing market forecast for Orange County and let you know what to expect, what's been happening in the market, and then ultimately, if you're buying or selling a home, my advice for you. So let's go ahead and get into it. Okay, so first we're going to review where we are now in the Orange County housing market before we get into what to expect over these next couple weeks and months. And then you definitely want to stick around to the end because as we transition into this fall market, if you're a buyer or seller, I have some advice for you to help you navigate this type of market. So let's go ahead and start with where we are right now. So on the supply side of things, supply has been dropping for about 4 weeks now. And when it comes to supply has been dominating the headlines recently because we just don't have enough of it right now. So for the month of August, for instance, we had almost 40% less homes hit the market than during a typical year if you look at the 3 years before COVID. So we're just not seeing enough homes hit the market, and the ones that are hitting the market are getting gobbled up pretty quickly. It's just leaving an extremely low inventory environment throughout Orange County. Now, on the demand side of things, demand has actually been dropping faster than supply recently, which has a lot to do with the interest rates going up over these last couple weeks, maxing out last week at almost 7.5%. So demand has dropped 7% in just the last 2 weeks, and as we head through fall, you can expect that to continue as well. So supply is down, demand is down. Really, we haven't seen much shift in the Orange County housing market over the last month, except that it's starting to take a little bit longer for homes to sell. So for instance, about 2 weeks ago, it took about 46 days for the average seller to get their home on the market and into escrow. Now, because demand is slowing down a little bit faster than supply, we're seeing that tick up to about 49 days. Still an extremely hot seller's market right now. However, if you look at the higher price points, the $2 million plus right now, that is definitely decelerating a little bit faster than the rest of the market. So for example, 2 weeks ago, it was taking about 82 days to go from putting the house on the market, getting it into escrow, and that has jumped all the way to 96 days in just 2 weeks. So we're definitely starting to see those higher end price points start to take a little bit longer to sell. And just to be clear, historically, that's still a very quick turnaround time for those type of homes. However, it is slowing down a little bit faster than the rest of the market. Now, on the interest rate side of things, like I said, last week we hit a high of almost 7.5%, which is the highest interest rates have been since the year 2000. So it's definitely a much higher interest rate environment than most people are used to, and that has definitely slowed the market down in terms of how much demand is out there. But like I've talked about on previous episodes, it's also impacting inventory just as much as it is demand, because a lot of people are getting stuck in their homes because they have interest rates at 3 or 4%, and even though they want to move, they feel like they can't because they don't want to give up those super low interest rates because their payments would likely double if they were to move in even to the same price property as they had before. So right now, a lot of sellers that could be selling their home are staying put, and that is causing inventory to artificially be low right now. And so even though demand is low, supply is low as well, and that's why we really haven't seen much shifting in the marketplace since February when we first got back into a seller's market. So when will interest rates actually start coming back down? Well, that's definitely the million-dollar question this year. So at the beginning of the year, most people were predicting that by the back half of 2023, we would start seeing those interest rates go down. However, that really hasn't happened. And the reason that really hasn't happened is because the US economy is doing better than a lot of people thought it would be. Right now, a lot of people assumed that we would be in some type of recession, we'd have a bunch of job loss going on, and because of that, the Feds would start reducing their rates, and eventually that would trickle down down and see interest rates go down for mortgages as well. But instead, what's happened is the US economy has been a lot more resilient than people thought. And because of the Fed being more aggressive, we're seeing interest rates stay higher for longer. Because even though the Fed rates are not directly tied to the 30-year mortgage, when the Fed interest rates go higher, the 10-year Treasury tends to go higher, and the 10-year Treasury is what's more tied to 30-year mortgages. So really, until we start seeing the Fed start decreasing their rates, we're not really going to see any major relief in interest rates anytime soon. So the next question becomes, when will that happen? Well, the two things that need to happen is we need to see inflation come down, which since the beginning of the year, it's actually come down quite a bit, but it still has a ways to go. So as long as we continue on that trend, that's definitely going to be a positive sign that in the future, sometime in the next 6 to 12 months, we will see lower interest rates. But the second thing that needs to happen is we need the US economy to slow down. And unfortunately, that means we need to see unemployment go up, we need to see the job market contract, and we need to see a little bit more pain in the US economy before the Feds are comfortable stopping the rate increases and possibly starting to reduce them on the back end of things. So when they start reducing those rates, that's when you can expect to see interest rates drop a little bit more dramatically, which at this point is probably not going to happen until at least the first or second quarter of next year. So for the remainder of this year, unless we get some really bad news about the economy over the next couple months, you can expect rates to stay in the low 7s or high 6s, most likely for the next couple months as we finish out the year. So besides interest rates, the second major question that I get asked often is, when are we going to see a giant housing market collapse so that way I can actually afford to purchase a home again? The California Association of Realtors just came out with a study a few weeks ago saying that only 16% of Californians can actually afford to purchase a home. So right now, affordability is at one of the lowest points it's ever been in California. So logically, you would think something has to happen in order for these homes to become affordable again so people can start purchasing again. So really the only way that I could see this happening is that if we had a bunch of forced selling like we saw back in 2006, 7, and 8, where people had to sell their property because they could no longer afford the mortgage. So after that last giant housing crash, they did a giant reform on how people were able to get loans and what they'd be approved for. So there's very strict guidelines and you have to be very well qualified to be able to purchase a home ever since around 2009. So credit profiles for everybody that owns a home right now are much better than what they were back in 2006 when people were just buying it based on stated income, which basically means they never had to prove how much they made. They could just tell the lender, this is how much I make, and they would get a loan to be able to reflect that dollar amount. That is no longer the case. People in homes right now can afford to be there. So what would actually have to happen in order for home prices to crash is we'd have to have some type of mass forced selling event where people were forced to sell their home for other reasons. And in this case, the only one that I can think of is a major job loss recession, where we had a bunch of people lose their jobs all at once and they weren't able to find employment again for 3, 6, 9 months or maybe forever. In that case, if enough people lost their jobs and were forced to sell their home, you could finally start seeing supply go up much faster than demand, which would eventually start causing home prices to come back down. But again, that's not something that's immediate. That's something that would have to happen 6, 9, 12, 18 months after people lost their job because of the process and timelines involved with foreclosures. So it's not something that's going to happen anytime soon. And for those of you hoping that will happen, the chances of that happening are extremely slim right now. So why is this type of event not very likely? Well, there's a lot of reasons, but let's quickly just go over a few of them. So one of them we already talked about. The credit profiles of homeowners right now has never been better. So not only are people that purchased homes very well qualified to do so, but right now in the United States, almost 50% of all homeowners own their home free and clear, which means they have no more mortgage, they've paid it all off. And now the other 50% that still owe a mortgage, 50% of those have 50% or more paid off. So a giant amount of equity in their home, which means that if they lost their job, there's a much better chance than back in 2006, 7, and 8 that they're going to be able to talk to the bank and come up with some type of loan repayment program that's going to enable them to keep their house and then eventually start making payments again once they start getting a job. And the third reason is the chances of a major recession seem to be going down by the day. So for instance, Goldman Sachs just came out for the third time in just just the last couple months revising its prediction on how likely we are to have a recession, and right now they've dropped it all the way down to just a 15% chance. Now, they're definitely lower than some of the other major institutions out there. However, we're starting to see these larger institutions become a little bit more confident that we might still have a recession, but if we do, it's going to be a minor one and nothing that's going to be deep and long enough to be able to impact the housing market in any significant way. So if you're hoping for housing prices to crash at some point, you're basically hoping that millions of people around the US start losing their job and are forced to sell a home. So I'm not in that camp that one thinks that's going to happen or even wants that to happen to anybody, but that would be the only way that I see housing prices come down anytime soon. So with all that being said, what can you expect to see in the housing market as we head through September and October? Well, we are now firmly in the fall market, which means that supply should continue to go down as we head through the next 2 months, and demand will drop as well. Now, how much each drops, a lot of it is going to depend on what interest rates are doing. If interest rates go a little bit higher, we're seeing that demand is dropping a little bit faster than supply. If interest rates remain right around the 7% mark, however, you're probably going to see supply and demand drop at about the same rate. If interest rates go below 7%, you might see demand drop faster than supply and home prices start heating up again. Either way, right now as we head through fall, home prices are still on the rise. We are still in a seller's market, but we're just not quite as hot as we were over the last few months of summer. So what does this all mean if you're thinking of buying or selling a house? So let's go ahead and start with my advice for buyers first. So buyers, here's the most common question I get from you. Is now a good time to buy a home, and what are home values going to do over the next 12 months? Now that's a completely rational question to have, and the way I respond to this is I always ask the same question back. Well, what are you planning on doing with the property? Are you planning to own that property, live in it for a long time, 5+ years with you and your family? You can see it as a long-term home. Or are you thinking you might only be there for 2 or 3 years? You might start a family, or you have kids already that are growing up and might need their own space. And so you're thinking of upgrading to a larger home, maybe a few years down the line. That is really the biggest question you need to ask yourself right now. Because if you're in the second camp, where you're only thinking of owning a home for 2 to 3 years, no matter what the market is doing, up or down, it's always going to be more risky for you to own a home for less time than more time. So if you're thinking of buying a home for the short term, you have to be very careful about what type of offers you place, making sure you get a good value for the home, because you're just more susceptible to the general ups and downs of the housing market because it's a shorter period of time. However, if you're like most home buyers who are purchasing a home to live in long term, it's going to have less and less of an effect on you what home values are doing in the short term, because you have that monthly mortgage payment locked in, you can afford it, and over 10, 15 years, it's been shown over and over again, 100% of the time, that home values have always gone up. So the longer you plan on living in your house, the less you need to worry about what home values are going to be doing and what interest rates are doing, and more about, can I afford the payment in the neighborhood I want to be in and get the amenities I want? If the answer to that question is yes, then you should always look at talking to a lender, explore your options, see what type of loans are available for you, because that's always the first step. It's free. It usually only takes a day or two once you get the information to them, and that's going to give you a much better idea of what you can afford and if it's realistic for you to look at homes right now. Now, they might tell you, no, it's not a good time to look at homes. It doesn't look like you're going to be able to afford the type of home you want to, but in that case, good lenders are going to come up with a game plan and basically walk through all of your finances with you, letting you know this is what you need to do in order to purchase that dream home 6, 12, 18 months down the line. And so you have that plan in front of you and you can take the steps you need to get to eventual home ownership. So now on the other side, sellers. The best advice I have for sellers right now is you have to understand that we are in a transitioning market. So we're going from the summer to the fall season, which means if you're trying to place your house on the market right now, thinking that we're still having the demand numbers we saw in the summer and that you're going to have 5, 6, 7 offers on your home, you're most likely going to be disappointed. And often I see sellers overprice their home around this time of year because they still think we're in that seller's market. Now that doesn't mean you can't get top dollar for your home still, and most likely have the highest sale in your neighborhood based on similar homes and similar conditions. However, you need to be very strategic about that price that you offer your home at right up front, because if you overprice a home home in today's market, it's going to sit there for weeks and weeks until you eventually lower the price. And that's when all those investors come out that have cash offers that will offer you $100,000 below your asking price, as well as opportunistic buyers who might think they can get a deal because you've lowered your price. So it's been shown time and time again that if you don't price your home correctly out of the gate the first time, you're leaving money on the table. So when you're going through and getting your home ready to be sold, you need to make sure you're deep diving into those comparable sales for your neighborhood and making sure you price it based on current market value and what's happening in today's market, not yesterday's market. And this should also go without saying, but because we are going through this transition right now into the fall market, you need to make sure that your marketing materials are on point and look as good as possible. You want your home to stand out above everybody else's, so you get all those eyeballs on it and the most qualified buyers through your home as possible. And this means high-end photos, videos, 3D walking tours, drone footage if needed, as well as making sure that your home is everywhere that buyers are. And that includes social media. So Instagram, Facebook, yes, even TikTok. Those type of places people are browsing and finding homes they like and contacting the agent to be able to set up tours. I get people reaching out to me on social media all the time about homes that I post on there. So you need to make sure that your marketing plan is meeting buyers where they are. And right now, most buyers are starting their tours online before they even see the property or go to an open house. So you need to make sure your marketing's on point, your curb appeal's on point, have your home staged if you can. It makes a giant difference in the selling price, and just make sure that overall your home is standing out above everybody else's. Now, if you are thinking of buying or selling a home sometime in the near future and you want to know more about the market, some strategies that you can use to make sure you're successful, as well as just general information on what it takes to buy or sell a home in today's market, feel free to contact me anytime. If you want to set up a free 30-minute discovery call, depending on where you're watching this, there'll either be a link in the description or a link in my bio. Click on that, schedule a time that's easy for you. I'd love to have a conversation and answer all the questions you have. And one last favor I have, if you did find today's episode useful, can you please hit that like and subscribe button, because I put out new episodes and new content every single week, so that way you can stay up to date. And if you know any family or friends that can use this information, please consider sharing it as well. I would really appreciate it. And until next week, stay healthy, stay happy, and I'll see you on the next show. Bye, everybody.